What is free market capitalism? It's the minimum of government intervention. It's a bottoms-up economy it's called the invisible hand. Adam Smith invented the whole damn concept in the late 79. Most brilliant thing in history, and the marriage of democracy, which gives everybody an equal vote, but gives the people who contribute total merit-based system, is the greatest system in history. And everything they've been doing in the last 10 or 20 years is to basically go against free market capitalism. The markets know how to redirect financial resources and bring prices down if they get too high and quickly get rid of excess capacity and get things. That's what free market capitalism does. It's a self-correcting, balancing system. That's its genius without government interference and steering, which a few dumbass people on top of government are never going to make as good decision as the invisible hand, the votes of zillions of people. So we're basically saying free market capitalism has made us rich, and I'm talking just in 1 century, 10x, okay? If you go back to 1700s, probably 20x or something. Raised our standard of living so much that you can't even compare it to any time in history anywhere, not Rome or anything else, okay? And now we're saying, oh, well, we don't like it now that we're going to have a recession or housing's overvalued and we could have a housing crash and some banks could lose some money and some people could default on their loans. That's how free market capitalism works. It lets everybody, all the flowers bloom, but then you have to shake things out. Recessions are as essential, and I would say more essential than the boom, because recessions clear out all the failures because nobody knows who's going to succeed. People say they do, but they don't until it happens. And most of the genius is Jeff Bezos. People thought he was a crazy man. No, he's a genius, okay? He saw almost all retail going on the internet way before anybody thought it'd be more than books and CDs and some other simple things, okay? But that's how capitalism works. You can't second guess capitalism or it's not free markets. So governments are killing the golden goose here, saying, well, things got so good, now we're going to have to go through some, real estate corrections and some stock crashes and people are going to lose money. And they're throwing out the system. This is, to me, the worst crime in history. I've been cranking about this for 2 decades now, and it doesn't matter. We're only going to get the lesson when these guys fail so bad. So that's exactly what you're saying. Every time we have a crisis, okay, 2000, 2002, okay, they stepped in there. Well, 2008 was the big one. They don't know why. I knew why in advance. It doesn't matter. It's the big one, so they overreacted to that. At some point, people are not stupid. They get, wait a minute, we keep having these bubbles. They keep crashing. Then the government steps in and creates the next bubble, and then it crashes. Every bubble goes higher and every crash goes lower. Oh no, this is not working. I think this is the straw that breaks the camel's back. After this much stimulus for this long, if we crash again and everything goes back, and again, I'm telling people right now, I can tell you exactly where stocks are likely to go, the 2009 lows when they took off. Real estate was longer to recover, the mid-2012 lows in real estate. So you can look at individual real estate anywhere in the world or in the United States because real estate is much more regional than stocks in the stock markets. So it's good to be able to say, I tell people, what was your house worth in the middle of 2012 at the last and the only major bottom in real estate, okay, since way back, okay? That's where it's going to naturally go. That's what history would say. I mean, if I looked at the real estate chart or any chart, I can tell you 1, 2, 3, 4, 5. Okay, we're in a 5th wave peak and almost everything. Where do you go? Back to the 4th wave low. That's 2009 for stocks, 2012 for real estate. And that means real estate doesn't go down as much as stocks. But the problem with real estate, it's mortgaged heavily. So the pain is actually higher in real estate, especially for the bank. They don't lend a lot of money against stocks. They lend a lot of money against real estate of all types. So there's nothing wrong with crises and recessions. We have these great booms, and then in a fraction of the time, maybe a third of the time, you can flush out all the bad debts, all the zombie companies, and get healthy again, and then boom again. But if you fight the downturn, the boom gets less and less healthy, and the economy gets more and more, as health people would call it, toxic. They're called zombie companies, and I think it's like 23% of the large companies out there are only surviving by not meeting their debt service. They're paying their normal expenses, but they're stiffing their creditors and pushing them back to survive. And when zombie companies grow, that's what a recession's for. Flush them out. Now, it doesn't mean they die. It means they have an excuse to restructure debts. And that's what one of the greatest inventions was in the US, Chapter 11 bankruptcy instead of Chapter 7. Instead of a company gets in trouble, just kill it, let it be protected for a short period of time, and restructure its debts in a civil way and not kill the company, but everybody takes a hit. The company takes a hit, the creditors take a hit, but it's the best solution. And that's what a recession is. Recessions are keeping us healthy, and the government and the Federal Reserve and politicians have come up with a theory. Our job is to never let recessions happen because they're bad, 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 bad. That's like saying we shouldn't sleep. Let somebody not sleep for 3 nights and they will be a babbling idiot. First of all, the only safe haven here in 2008 proved this, because gold held up in the early 2008 after stocks started to go down and other things. Even gold caved about 40% in 2008. But real estate crashed, everything. So 2008 proved that you could have an everything bubble burst. Everything went down. And the treasury bonds, the 10, 30-year treasury bonds, or the ETF TLT, which is a combination of 10 and 30, so it's an average 20-year. I'd rather have the 30-year because the longer the duration, the more leverage you get from this safe haven play. But the treasury bonds are the only thing that actually went up. And they went up like 30, 40% in 2008 when stocks went down 57% and even gold went down 40% for a short period of time and so on and so on. So it's an everything bubble. There's nowhere to hide except these treasury bonds. What you need to do, you have to look at all your assets, your retirement portfolio. Forget your life plan. Throw your timeline out. If you're thinking of retiring in 3 years and then downsizing to a smaller home in a retirement area, do it now. In fact, even better, sell your big home now, wait, rent for a couple years, and then buy your retirement home at a much lower price a couple years from now. The economy's timeline is more important. Everybody has their own life cycle and plan on different sides. That's fine. That's normal. Now's not the time. This thing is so big, you got to look at the economy's timeline, the economy cycle, and adjust to it. Get out every financial asset you can get rid of. Get it, even if you're collecting coins. Sell the damn coins, okay? And rebuy collectible coins a couple of years from now. Sell your house and downsize and rent for a few years and downsize, or get a better house later. You'd rather do that if you're younger. And if you're older and you're going to downsize in retirement, sell your big house now and downsize later. Rent for just a few years. It's not a big deal, okay? Just to rent for a few years. So you have to look at all your assets. Where's your exposure? Stocks are easy to sell. If you're not sure I'm right, here's the problem with stocks. The first stock crash in a bubble is 40 to 50% in a matter of months. So you get whacked so hard, but then if you get caught by that, you can wait for about a 50% retracement and at least get out a little work. Real estate's not like that. Real estate, once it gets questionable, everybody backs off and it's hard to sell anything. It's hard to move it at all. I mean, I tell you one thing you could do. If you really wanted to keep your house, you could hedge your house in the stock market. You could buy a leveraged stock short on an index or something like that, like SQQ, 3 times short the NASDAQ. And if we have this crash, there's no question technology stocks will go down. Your leveraged hedge will grow and help offset your real estate loss in case you decide, I want to stay in my home no matter what. So there's always things you can do to offset it, but don't say, well, I don't want to think this, and Harry's crazy, and I've talked to my financial advisor, and he says this won't happen. I talked to my next door neighbor, he says it won't happen. Don't listen to anybody right now is my advice. I'm sorry. This is what I do, is study cycles and history, and in more depth than anybody studied more than me. I'd love to hire them or kill them, okay? And just get them out of the way. Because nobody's going to tell you. Everybody say, it's all right. In the past, every stock correction's gone to new highs. No, 1929 did not see new highs until 1953. If you'd have been retiring in 29, you'd have been dead before you got even, and you'd have suffered an 89% loss, and you would not have held through that loss. You would have sold somewhere far on the way down, and you wouldn't have gotten in until way too late again, because that's what people do. So this is just a time to be cautious. Don't look a gift horse in the mouth. Look at all your assets, especially real estate, number one. Because again, you can wait on stocks and gauge, and you can sell a stock in a second, any day of the week. No stocks, okay? Real estate can get very hard to sell, and you may not be able to sell at all once you realize you're in trouble. That's why I think real estate's the number one thing people got to look at. And frankly, they're happy to sell stocks, maybe to take a break. But most people, well, I can't sell my home. Well, look, most baby boomers are going to downsize into retirement anyway. So just look at the economy's life cycle, look at yours, and favor the economy's life cycle of saying, I'm going to die now. You may die 20 years from now, but I'm going to die now. So anything that's affected by my cycle, you better adjust into your life cycle. So adjust your life cycle for the economy's life cycle. And I'm saying they've now pushed this so many years with 27 trillion in stimulus. Nobody knows that number. And people hear that number, oh, I didn't know it's that big. Yeah, it is that big. 1.5 times GDP has been poured into our economy to keep the damn dying thing alive in the emergency room. If you knew it was in the emergency room, would you be investing in it? No, they've hid that. They made the economy look as good as ever. It's not as good as ever.